Hi everybody, my name is Pedro Souza and today I'm going to show you how to trade the Eurodollar. It's Monday. I'm looking for a setup to sell the Eurodollar and we had a good pullback. We've got a gap in the market and so let's have a look and see if there's any patterns that we can trade. So the first thing I would do is looking at the daily chart. You can see this is the daily chart. We have a nice thrust down. I will measure it. So nice thrust down and price is challenging the 382 Fibonacci retracement level. The 50% is around here. The reason I don't place the 50% level is because I use confluence levels to trade the Eurodollar, and those confluence levels are calculated primarily using the 382 and the 618 clusters. So because of that, I usually don't place the 50%. But when there's a level, and you can see here that previously was support, and then I'll be placing these levels and I'll be looking to use them as well for my entries. So the first thing we can see is that this is the thrust down, so it's a move down, and if that is the case, this is a thrust and price wants to continue down, we have to treat this as a pullback. Similar to this one, you can actually use the pullbacks. You can measure the pullbacks and see if they are harmonic in nature. This one is not, it doesn't. You can say even if price moves slightly above, it's a perfectly normal pullback. So Uh, once we have looked at the daily chart, the next thing we need to do is look at the lower time frames to see if we can find something that is going to corroborate what we see on the daily chart. So, and the other thing I would like to say is that you can see here the MACD line challenging the signal line. There is a trend switch. There is the trend changing form from bearish to bullish. So that is also something I'm looking at, because as the day finishes, if this is a rejection candle, it's indicating to me that these lows are going to be challenged soon. Okay, so let's move on to a lower time frame. I'm using the 4-hour time frame and see what we got here. So here the first thing you can see is a butterfly cell forming. So here you can see, so this would be the left wing, and then we measure the swing. The You can see prices start moving straight from the 127 extension, and we're going to mark also the 1618 extension. This 1618 extension is not far off our 50% level on the daily chart, so it's an excellent um, place for you to enter the market if you think that the market is actually just pulling back and is going to continue down. So because by having strong levels, Fibonacci levels, you also have a way of placing your stops that you know if price is going to break this level, then this whole setup is void. It's not significant anymore, and you can close your orders, take the losses, because has not worked. Okay, and what you thought was going to happen, it's not what market is going to do. So take your losses and look for another setup. In this case, so far, price is responding to the level. That's good. Usually to trade these kind of setups, I will use a split position strategy. That means that I'm going to split my risk between a couple of levels. In this case, I would enter the first short at the 127 extension, the second short just in between, in the middle, and the third one would be at the 1618 extension, which remember is close to the 50% on the a daily chart. So by doing that, you splitting, let's say you would risk 1% per position. In this case, you are splitting that 1% by three positions. So you would take each position with a 33 of 1% um, of your usual, which is your usual position. So that would be one position here, another one there, and another one there. The stops will have to be just above. I would use it 15, 20 pip stop. It's more than enough for you to know whether you're right or wrong. Now, in terms of targets for this trade, usually butterflies, the minimum target is the 382. So it's 302. But this whole swing up will be here. That's a very small uh, retracement, but if a small move. But if you were trading the 4 hour alone, those would be the first two targets. So if you, in terms of target profit, this would be the first one, the second, and this would be the final one. But because we also using the daily chart, then that changes things. Because now we're looking at this move down, we have a pullback, and then we expect continuation. So what happens when you have when you're using different time frames is that then you can target, you can have bigger targets. So in this case, because this would be the XP like that, this would be first leg, and this would be the second leg. So what I would do here is the first target profit is going to be the lows, the previous lows at 106.68 approximately. And then if price breaks here, then I'll be taking the rest of the profits, those lows. So I expecting as well these lows to be challenged. This was a, if you look here, you can see there was a previous head and shoulders, inverse head and shoulders there. You probably can't see it very well. It's now visible. So you can see the left shoulder, price goes back up, the head. So these lows would also supposed to be challenged. So those lows and these ones are supposed to be challenged. And that's where you want to take your profits. So I hope this has helped you. I hope you can trade it as well. And I'll be seeing you soon. Thank you very much. Bye.